Good to be with you. My name is Dwayne Abel. I'm a Deputy Director in PCAOB's Division of Registration and Inspections, and I also serve as the Program Leader for our non-affiliated firm inspection program, our NAF program. I'm relatively new into the role, officially just about a month in, so I'm looking forward to meeting more of you and excited to be here today. I'm pleased to present this section of our Small Business Forum along with Janet Borgman, an Associate Director from our Dallas office, who is also in the NAF program, and with Glenn Tempero, an Associate Director from our Washington, D.C. office, who serves as our remediation leader. Before I begin, we have our standard disclaimer. The views we express are in our official capacity of members of Division of Registration and Inspection. They are our own and do not necessarily reflect the views of the board or any individual board member or other members of the staff. And we are going to start off with the first code word, 854. Just give you a moment. So our objectives. Before I get into the objectives, I don't know if anybody traveled in today for this. Are most of y'all local? So those of us that traveled in yesterday, the thunderstorms caused quite a havoc. My flight was delayed by 5 hours. So I didn't get in until very late last night, but I got to share this quick story. I was in my Uber coming through, and it was like, oh, thank goodness there's not much traffic at 1 a.m. in the morning. But about a block from the hotel here, police lights pull us over. Oh my goodness. But they, I'm not sure why they pulled over the Uber driver, but they did ask to roll down the windows, and the guy said, I'm an Uber driver. And they're looking at me, and I was like, hey, my hotel's right there. Can I just get out? They're like, sure. Can I get my bags? And the guy said, oh, you're just getting here. The officer was very nice. He said, just welcome to Chicago. So I had a warm welcome at 1 in the morning from the friendly police officers. Okay, objectives today. First, I'm going to provide just some observations from our 2024 inspections. I know Chair Williams shared some information about the decrease in rates. I'll share a little bit more information there. Second, I'm going to provide an overview of our 2025 inspections, which are currently underway. Third, Glenn is going to take us a little bit deeper into remediation. And then last, Janet will take you through a brief knowledge check, some of the information that we've covered, as well as some of our common inspection findings. Okay. So 2024 inspections, as Chair Williams said, we are very, very pleased to see that overall deficiency rates are trending in the right direction. I think through COVID, we saw a spike in rates. We think it was caused by a variety of different reasons, but we do see that firms are really focused on enhancing the quality of their audits, all sizes of firms, and we see that your hard work is playing out in lower deficiency rates. In 2024, excluding the broker-dealer inspections, we inspected approximately 171 firms. And through those inspections, we reviewed over 800 public company audits that generally had fiscal years ending in 2023. So that's a lot of work that we do. We obviously have the large firm, the GNF firms, those that we look at, but within the NAF program, we are looking at over 100 firms a year. So it's a lot of work that our people are going through. But as I said, we have observed tangible improvement in audit quality, and that is measured by the Part 1 rates. So going into a little bit of details, overall the Part 1 deficiency rate went from 46% in our 2023 inspections down to 39% last year. So that's a great improvement. Across the Big Four firms, and we highlight the Big Four firms because they do audit approximately 80% of the market cap of issuers. Those Part 1 rates went from 26% down to 20% in 2024, so a great improvement there. The global network firms, which are the affiliates of the Big Four, actually for the 6 U.S. GNFs, which are the 6 largest firms, the rates went from 34% to 26%. For the NAF annual firms, which there are 8 of them in 2024, there the rates really kind of held steady. It was 53% in 2023 and 52% in 2024. So that is an area that we are focusing on, working with the NAF annually inspected firms and having discussions on a regular basis about audit quality and how to improve their rates. I know Glenn and his team are doing the same. For triennially inspected firms, so those that we have the once every 3-year mandate, we also saw improvements. Those rates within the NAF program, the rates improved from 67% to 61% in 2024. Now those rates are still very, very high, and we know that there's still a lot of work to do. We look forward to working with you and improving those rates. And then for the GNF triennially inspected firms, which are obviously the non-U.S. firms, those rates decreased from 35% to 26% in 2024. So again, improvements pretty much across all the different aspects of our inspections program, which is great news. We know that you all, it's tough going through inspections with us. We know the work that you put into it, and we are encouraged to see the work that you're doing with respect to audit quality, and we hope that you can keep up that momentum. Uh-oh. Oh boy, now I went too far.
There you go.
There we go. Okay. Chair Williams mentioned earlier the spotlights and audit focus that we, the publications that we put out. And I always got to ask this, but honestly, how many of you actually look at these? I see good hands. Awesome. So these are things that we truly are putting out there because we want to get information that is helpful to you. We are looking at trying to take like bite-sized items and give you a publication that's several pages that provides valuable information. But I strongly encourage you, and we'll talk through some of the spotlights that we've had here. If there are areas or things that you would like us to comment on or write to produce a publication on, please reach out. Talk to us during a break. We are always looking for what's going to be our next publication. But as Chair Williams says, that these publications provide very specific information about aspects that we think are important for challenges that we see when we're conducting our inspections. We focus on the deficiencies that we see, but also we focus on areas of quality that we see, so the good practices. Some of our more recent inspections, we did, just as Chair Williams said, we just had the staff update on 2024 inspections that was released this past Monday. Other areas that we have recently issued things are there up on the screen. Chair Williams also mentioned that we launched a publication series, Audit Focus. Again, that's focused for the firms, the smaller firms that audit smaller issuers. Our first edition was on CAMS, which was published in November 2024. We had one on audit communications, journal entries, and Form AP. All of these can be found on our website. And again, if there are specific areas that you would like more information on, please let us know. We'd be happy to consider that for a future publication. As I said earlier, these are designed to help you, and we truly do want to help you, as Chair Williams said. Reach out and talk to us, but ultimately it's on you as the firms to address and reduce the number of deficiencies. We see that many of you are accepting this challenge, and as Chair Williams said, we urge you to keep this momentum up. Okay, we're going to have a quick polling question, and I know you all are going to get this right because you are so focused on all of our publications. So, which of the following was not published this year in 2025? I'll give you a minute to answer that polling question. Okay, let's move forward. It's always a good idea to answer all were published in 2025, but that's not correct. Actually, the correct answer is A, the Spotlight staff priorities from 2025. That was actually published in December of 2024. We are publishing information on a regular basis, so again, encourage you to look at our website. Okay, next we have a code word, another code word, 954. Give you a minute to record that. Next, I'm going to talk about some common areas of deficiencies. The first area is revenue and related accounts. Now, this is probably not surprising to you. Revenue is an area that we frequently select as a focus area because of the challenges and complexities involved with an issuer has in determining the proper revenue recognition, and then that you as an auditor have in assessing those judgments that an issuer has. And I'll say that in all these areas of common deficiencies, it's important that you really spend time as an auditor on the risk assessment, right? I mean, that's a basic, but frequently the deficiencies that we identify are things where an auditor has identified a risk, but then the audit procedures just weren't sufficient. Specific risk assessments, looking at the specific, whether it's the key estimates involved in a process or the key points where something could go wrong. Just a reminder, that's a great thing to start on. Thinking about what are the risks and then stepping back and saying, okay, was sufficient work done around those areas? So here's a few examples of some of the deficiencies that we've observed with respect to revenue. First example, an engagement team did not perform any procedures on significant assumptions in a percentage of completion basis of revenue recognition. Second example, an engagement team used software-assisted correlation analysis to test revenue. In looking at the data, the engagement team identified that certain of the data used in this analysis did not relate to revenue, but they did not do sufficient procedures to actually go back and fix the data and then rerun the analyses. And third, an engagement team did not perform sufficient procedures related to the valuation and allocation of bundled sales transactions. Again, bundled sales transactions are an area of more complexity, and is an area where we find deficiencies. Second area is on inventory. Inventory is a complex area, especially when there's a lot of manufacturing environment challenging costing involved. But One example, engagement team did not perform any procedures to test the action completeness of the period end inventory listing and the completeness of the physical inventory adjustments. Maybe I'll just pause here and just say in both the two examples that I've had, and I think in the ones that are coming up later, data is a key aspect of certain of the deficiencies. And we'll talk a little bit later about it, but as auditors are using more technology to enhance their audit procedures, frequently that involves getting data from the client, and making sure that data is accurate and complete is a critical thing that I just wanted to spend a moment to highlight. Another example on inventories where an auditor did not perform procedures to test the movement between the interim date when the physical inventory was taken and then the year-end date. Next area is business combinations. Obviously, business combinations by its nature is complex, affects many different financial statement line items. One example, an engagement team did not perform sufficient substantive procedures to test the fair value of acquired assets, and specifically testing the forecast used in those valuations. Another example, an engagement team did not perform sufficient substantive procedures to test other significant aspects of an acquisition agreement, such as contingent consideration. Last area that I'm going to focus on is investment securities. Investment securities usually represent the second largest asset class for banks, so it is an area that we look at frequently. One example is an engagement team did not perform sufficient substantive procedures to test the presentation and disclosure of the fair value hierarchy in the notes to the financial statements. Another example, an engagement team did not obtain an appropriate sample for testing the investments that could be expected to be representative of the population of investments. And a last example, an engagement team did not perform any substantive procedures to test the assumptions used in the valuation of investments. Again, these are pretty common and basic types of deficiencies. Next, we'll move quickly into some other observations that we have from our inspections. We continue to identify challenges with respect to audit committee communications, and these findings have ranged across all sizes of firms. One example, an audit team did not communicate to the audit committee the terms of the engagement letter. Pretty basic requirement. Another team did not communicate the significant risks that it had identified during its risk assessment procedures. And another example is that an engagement team did not communicate critical accounting estimates and the related significant assumptions to the audit committee. Next is AS 2401, consideration of fraud in the financial statement audit. This is an area that we do look at on pretty much all of our audit files that we review. And again, we continue to find some pretty basic deficiencies in this area, including like an engagement team did not conduct the fraud brainstorming discussion as required, or did not have the fraud interview with management as required, or when they are selecting entries for testing, did not support its rationale for limiting its testing to only certain entries that met its fraud criteria. Again, this is encourage you to take a look at the document that we released this past Monday. There's further details in there. But we've also have continued to identify deficiencies with respect to the auditor's report. And along with that, with Form AP. Form AP has been out there for 7 or 8 years, but we still find basic deficiencies with respect to accumulating hours from audit participants and then the reporting of that, including late reporting of Form AP. With respect to the firm's system of quality control, As we conduct our inspections, we are issuing engagement level comment forms. At the end of our inspection, we accumulate all of those engagement level comment forms and assess whether the combination of those comment forms could point to a problem with the firm's system of quality control with respect to different areas. One of the areas that we frequently have a QC finding on is with respect to testing controls. Testing controls obviously is important when it's an integrated audit, but also many of you take a controls reliant strategy when performing substantive audit procedures. And this is an area where we do find problems just in the basic aspects of testing controls. Another area is reliance on data and reports. I mentioned that earlier. As you are doing more technology-assisted auditing, that underlying data is critical. Just please focus on the auditing of that data to make sure that it is accurate and complete and fit for the purpose that you are using it for. We also have identified deficiencies with supervision and review, including the EQR reviews. If you are an EQR partner, obviously you take that responsibility very seriously, but there are the specific areas that you're required to review. But we do have instances where partners have not reviewed areas relating to significant risk or fraud risks, or the review has been insufficient. Again, I mentioned the spotlight, our staff update in 2024 inspection activities. Encourage you to take a look at that on our website, which was posted this past Monday. Okay, our 2025 inspections. As I said earlier, we issued this document in December of 2024, the spotlight on our inspection activities. Our inspections are underway right now. The focus for there was a question asked earlier to Chair Williams about how we select different areas. There are a number of factors that we take into consideration when determining what to look at on an inspection. We do have the focus on the risks, as well as Chair Williams mentioned, we do have random elements as well. But this year we are focusing on, particularly on certain industries that have been negatively affected by economic and geopolitical uncertainties and volatility. We're focused on areas where it may appear, based upon the hours reported to us, that there have been challenges with fee pressure or reduction in hours year over year. We're also focused on looking at the use of technology in audits or the use of AI by issuers. We are seeing certain issuers using artificial intelligence and models to help in the accounting process. Again, if you are looking at an area of complexity within an audit and the issuer is using AI, obviously that would be a risk that we think you would want to identify and focus in on. Those models are complex. They are models just like any other model, but the use of AI does add another layer of complexity. I encourage you to be focusing on during your audits. We are looking at continue to look at other areas, compliance with our basic rules and standards like we do in every audit. A couple of other things that we are looking at this year, we are focusing in on the firm's root cause process and looking at a firm's culture. We started our culture initiative a year ago. And we think that a tone at the top is important in any organization, and especially in an audit firm. I mean, you can say put out all the right words on a paper, but if the audit leaders are more focused on the bottom line, reducing hours as opposed to, getting the work done correctly. And we think that's an important thing to be focused in on, and it is an area that we are focused on during this inspection cycle. And as Chair Williams says, the last area is that we are focused on the timeliness of our inspection reports. In 2024, we published reports sooner than we had in 2023, and we fully expect that this year we'll be publishing reports more quickly as well. So as Chair Williams said, getting information to you sooner is better. Okay, with that, I'm going to transition to Glenn to talk about remediation.
Thank you, Dwayne. Let me just see if I can get this to work here. Okay. My name's Glenn Tempera. I'm the remediation team leader at the PCAOB, and my story and how I got here is a little less... Can you hear me? Okay, sorry. Is a little less interesting than Dwayne, where he had the police involved in walking 10 miles in Chicago to get here. Okay, well, you got to exaggerate. About a month ago, I was talking to DRR leadership and expressed a view that I thought we needed to be more engaging, talking about remediation, the remediation process, remediation staff guidance. And then lo and behold, a week later, they said, great idea, a small business forum in 3 weeks, pull together a presentation and talk about remediation. So that's how I ended up here. So a little less interesting than Dwayne, but excited to be here. And as people know me, I love to talk about remediation because it's particularly important with regards to the audit improvement process. So today we'll provide you an overview of the remediation process, the framework, cover some information about the staff guidance, and as Chair Williams talked about, the supplemental staff guidance and a couple other tools and things of that nature that we have out there, and try to walk through a couple of practical examples on how we look at certain types of remedial actions, and also walk through an example, QCC, or quality control criticisms. I'll refer to those as QCC the rest of my presentation, on how we look and how we think about the process of attempting to remediate a quality control criticism and the key decision points on that. The issuance of an inspection report where quality control criticisms are included in the non-public section starts the clock. The 12-month remediation period is prescribed in the Sarbanes-Oxley Act. Although it's important that firms do not have to wait for the inspection report to be issued to begin taking remedial actions to address the quality control criticisms that have been communicated during the inspections. If the inspection report does not include a QCC in Part 2, then there's no need for the firm to submit a remediation submission. For inspection reports that include quality control criticisms in Part 2, once the firm receives the final inspection report, it has 12 months to remediate the quality control criticism identified in the inspection report to the satisfaction of the board. And that's stipulated in the Sarbanes-Oxley Act. During this period, particularly early in the period, we encourage firms to open a dialogue with us about their remediation plans in order to receive timely feedback. By the end of the 12-month remediation period, firms should have their final remediation submission, including supporting evidence, and have that submitted to us. It's at this point we begin to perform our formal evaluation in order to make a recommendation to the board. And we'll discuss a little later the 5 criteria that we go through in performing our evaluation of a firm's remediation response. There are a few instances where firms do not provide a remediation response, and in these cases, a failure to make a timely submission constitutes a failure to address the quality control criticisms to the board's satisfaction, and the Part 2 of those firms are automatically made public. Hide my little thing over here. So we'll talk step 1 with regards to the remediation framework is grounded in the Sarbanes-Oxley Act and the guidance contained in the rules, board releases, and staff guidance documents. Section 104 G2 of the Sarbanes-Oxley Act specifically states that no portions of an inspection report that deal with criticisms or potential defects in a firm's system of quality control of the firm under inspection shall be made public if those criticisms or defects are addressed by the firm to the satisfaction of the board not later than 12 months after the issuance of the report. While firms are not required to remediate the quality control criticisms contained in their inspection report, the Act affords the firm an opportunity to remediate them to the board's satisfaction in order to keep the quality control criticisms from being made public. So the intent of the legislation is to favor correction of a firm's quality control problems over the exposure of them in its inspection report, but affords the opportunity where the board feels like it should be made public, it will be made public. Board Rule 409 governs the process for addressing the criticisms and potential defects, as well as the process the board would go through to make non-public portions of the report publicly available. In 2006, the board issued a release that provides information to the public about the board's process and approach in determining whether a firm has addressed quality control criticisms to the satisfaction of the board for purposes of the Act. In the release, the board noted that its approach is to avoid attempting to manage firms' quality control systems through overly prescriptive remedies. The board's process is based on the proposition that each firm knows how to manage its operations and to define the specific methods by which it can address a particular quality control criticism. This allows each firm to craft effective remedies based on its particular organizational structure and operation. The board also recognizes that the quality control standards recognize that the nature and extent and formality of quality control policies and procedures appropriate for any particular firm take into account various factors, including the size and complexity of the firm. The staff guidance, which was issued in November 2013, provides firms with guidance on the 5 criteria that we use to evaluate a firm's remedial actions. And we just recently issued the supplemental guidance back in October, and that reflects considerations of the experience we've had with the staff guidance since it was issued over a decade ago. So that's kind of the key documents, the key framework that we go through in performing our role as far as the remediation activity for the PCAOB. We'll get a little further details here. The staff guidance. The staff guidance, 2013 staff guidance is posted on our website and provides firms with guidance on the criteria that we use to evaluate a firm's remedial actions. And also discusses the staff's consideration of repeat persistent criticisms, how we view the opportunity of the firms to monitor the effectiveness of its remedial actions, addresses training and intra-firm communications, and also addresses evidence of effectiveness of implemented remedial actions. So the 5 criteria, key: change, relevance, whether it's designed appropriately, whether it's implemented, and execution and effectiveness. So those will be the 5 key criteria here. I'll talk a little bit further detail on that. Change, in particular, does the remedial action represent a change to the firm's system of quality control that was in effect at the time of the conduct of that resulted in the quality control criticism? Depending upon the circumstances, relevant change may involve supplementing or replacing previous guidance, policies, or procedures, or taking steps to increase the technical competence and proficiency of the firm's personnel. Relevance. Is the remedial step responsive to and does it specifically address the quality control criticism described in the inspection report? Does it help to address or satisfy compliance with the board's quality control standards? If a root cause of the underlying quality control criticism is unclear, did the firm perform an appropriate root cause assessment in developing the remedial action? We found that firms that perform thoughtful root cause analysis are more likely to develop effective remedial actions that are responsive to the quality control criticism and are better able to demonstrate how the action is relevant and appropriately designed to remediate the quality control criticism. As I always like to say, if you don't know why it's broken, it's going to be hard to fix it. So the root cause, we believe, is an important part of that process. There may be multiple root causes contributing to the given deficiency. The nature and extent of the root cause process, while likely differ significantly with the size of the firm and complexity. For those firms that have questions about how to perform a root cause analysis, we would refer you to the spotlight on root cause assessment that was issued back in April of 24. The third criteria, design. Is the remedial step appropriately designed, either individually or in combination with other actions, to remediate the quality control criticism? And later, as I mentioned, we'll talk through a couple of example remedial actions and how we look at the design and raise some questions about what you all might want to think about when you're developing your actions. Implementation. To what extent was the remedial action put in operation by the close of the 12-month period? If not fully implemented, has the firm demonstrated an appropriate level of diligence and reasonable progress in adjusting the criticism during the 12-month period. In developing remediation recommendations for the board, we consider whether a firm approaches its action with diligence in pursuit of progress within the 12-month period. We do generally expect the firm to design and implement appropriate remedial actions no later than the end of the 12-month period. If a firm's remediation effort, by its nature, an effort that cannot be completely implemented with 12 months, establishing reasonable interim and long-term milestones coupled with firm monitoring of its performance against those milestones, and then making timely adjustments when appropriate can favorably influence our recommendation. In addition, in those circumstances, the implementation of interim measures to more quickly address the issues while the longer-term actions or measures are underway may weigh favorably in our evaluation process as well. Execution and effectiveness. Has the remedial step achieved, or if sufficient time has not passed to measure a result, is it expected to achieve the proposed effect that it was designed to achieve? If available, what do the subsequent firm monitoring procedures and external inspection results suggest about the effectiveness of the remedial steps? Consistent with the staff guidance, the information considered in our evaluation of a firm's remediation efforts includes evidence of effectiveness of the firm's actions that is available at the time of our evaluation, which occurs after the remediation period end. This includes results of the firm's monitoring procedures or evidence from subsequent inspections. It is important to know that when such evidence is available, it is treated as relevant, but is not the exclusive or the conclusive data point for our evaluation or our recommendation. A repeat or persistent criticism is a criticism that is similar to a criticism that has been included in one or more of the firm's previous inspection report. The staff guidance emphasizes that for repeat persistent criticisms, our evaluation of current remediation efforts take into account whether those efforts reflect change. In other words, do the current efforts differ meaningfully from the types of efforts the firm has described in previous remediation submissions, but ultimately do not appear to have sufficiently addressed the deficiency? In our evaluation of a firm's remedial efforts, the actual implementation, execution, and tangible results of a firm's remedial steps take on increasing importance for repeat and persistent criticisms. And this is an area that we do pay particular attention to, is this category of repeat and persistent criticisms. I'm going to talk a little bit about the supplemental staff guidance. Again, as I mentioned, this was issued back in October. And based on our experience in applying the November 2013 staff guidance, we've identified ways that the guidance can usefully be supplemented. The supplemental guidance does not change, it's important, does not change or supersede the existing guidance. We believe, however, the firm's undertaking to address quality control criticisms may benefit from considering the points discussed in the supplemental guidance under the topics listed on this slide. The first, the remediation period. Firms can begin the remediation process as soon as possible to take advantage of the entire remediation period. A firm can begin to develop a remediation plan and make changes to its quality control system even before the issuance of the inspection report that starts the 12-month countdown. In many cases, a firm has been effectively put on notice of these criticisms much earlier through written comments provided by the inspection staff or following the inspection fieldwork. Second, the pre-remediation period and communication with the staff, engagement with the staff. The guidance, again, encourages firms to plan ahead and initiate a dialogue with us as early as possible within the 12-month remediation period. Our experience indicates that the earlier a firm initiates dialogue with us, the better the firm will be able to adjust its approach, if necessary, to achieve a favorable recommendation. Too many firms engage with us late in the remediation period, particularly during the last 3 months, and in many cases in the last week or 2 or 3 of the remediation period end, which is very late in the process, for us to be able to have substantive dialogue with the firms and provide the firms a chance to react to our feedback. The inspection staff, however, and this is important, however, is no sense a collaborator or coach with respect to the firm's remediation efforts. And the firm remains solely responsible for the decisions about the remediation actions to take and for the content of its remediation submission. A firm should not assume that it will have the benefit of receiving substantive feedback on multiple rounds of drafts. Moreover, any feedback provided by us should not be viewed as any form of assurance concerning an eventual determination by the board. Again, this is feedback from the staff. Firms should also understand that we will not prioritize their efforts just because a firm's remediation period end is approaching. The third topic in the supplemental guidance talks about the Rule 4009A submission. The remediation submission the firm provides should fully describe and clearly a firm's remediation actions and should include all evidence that the firm wishes to have considered regarding the implementation, execution, and effectiveness of those actions. Tell us your story from start to finish. It's very important for you all to do that, or for the firms to do that. The submission should also include a description of the firm's views as to why the actions will effectively address the criticism. In the interest of effective remediation of quality control issues, we believe that firms should engage in early monitoring of the execution and effectiveness of their remedial efforts. If a firm submits monitoring results, it should submit all relevant monitoring results rather than selectively submitting only results that reflect favorably on the execution and effectiveness of the firm's remediation efforts. In the case of persistent criticisms, the firm's ongoing awareness of the issue, along with the experience the firm should be gaining in trying to address the issue, should make it increasingly feasible for the firm to perform pre-remediation period end monitoring of the execution and effectiveness of the firm's actions and include those results in the remediation submission. With regards to post-remediation period supplemental submissions, there are limits to that. The PCAOB rule does not afford a firm any right to submit a remediation submission after the remediation period. On occasion, based upon our review, we may have clarifying questions or request supporting information that was not included in the remediation submission. Beyond that, there are two narrow exceptions for post-remediation period end submissions. Talked a little bit before about monitoring results. So the firm's monitoring of its pre-remediation period and actions in operation at the remediation period end may provide evidence that did not exist as of the remediation period end that is relevant to assessing the execution and effectiveness of pre-remediation period end actions. So monitoring results post-RPE would be something we would be interested in finding out what the firm has on that front. So that's one opportunity to supplement a firm's remediation submission. The second one is in regards to Rule 4009A, which requires the director of DRI to advise a firm of the reasons that inspection staff will recommend that the board determine the firm's remediation efforts to be unsatisfactory. The board has noted that this written communication from the director provides a practical opportunity for the firm to come forward quickly with any additional evidence or demonstration that it has in fact improved its system of quality control or remedied the identified defects as of the remediation period end. Code. It's 127, so I'll pause there for a little bit. Let you guys get the number in your ISO or IO. Hopefully that was enough time for you to get the number. Again, the number was 127 for you all. So the next series of slides, we're going to talk about practical guidance on practically applying the remediation staff guidance to certain types of actions. And we'll start with applying it relative to new audit tools, which could be templates or practice aids. We take into various considerations when evaluating the design of new audit tools introduced by firms to attempt to remediate quality controls criticisms. Specifically, with regard to the tools, is the use of the audit tool mandatory when relevant? If a firm leaves to the discretion of its audit professionals whether to use the new tool or not, and the tool is not widely adopted across the firm, we generally don't consider the action to be appropriately designed to address the quality control criticism. And we also look at whether, in fact, it was implemented. So talk about monitoring, where the firm might want to monitor is, are the tools, when required to be used, are they being used as an opportunity for the firm to monitor and make sure the actions are being implemented as intended. Is the audit tool reflected in the audit work papers? Is there documentation of the use of the audit tool? What are the review requirements for the audit tool? What is the timing for completion of the audit tool? Is it an audit tool that's targeting planning, interim, or the final execution phase of the audit? Are things to think about. When designing remedial actions involving new tools, helpful questions the firms might want to consider in designing it. How is the tool designed to remediate the quality control criticism? Is it getting at the QCC specifically? Is it responsive to the scope of the quality control criticism? And also tailored to the underlying deficiencies as well? Were expectations regarding the use of the audit tool communicated to the firm's professionals, including effective dates, situations requiring use, documentation requirements, and review requirements? Is the completed audit tool required to be retained in the audit work papers? Is the completed audit tool required to be reviewed by appropriate individuals involved in the audit? For example, is the engagement partner required to review the template or the tool or the practice aid? And if there's a significant risk or it involves a significant decision or significant judgment, is the EQR partner required to review the completed tool as well? Does the audit tool ultimately address the execution of the audit procedures when relevant? And this might be the case if the tool is focusing on risk assessment, as Dwayne talked about. It'd be important if you explain in the response how this risk assessment tool, how that's going to cascade through and why you think that'll fix a problem if that's the only action here, and how it'll influence through your current system of quality control the execution ultimately of the audit. And again, telling a little bit of that story, how that tool, a risk assessment tool that's focusing on one phase of the audit, will take it through the execution of that particular audit testing in that audit area. And how does the firm reinforce effective use of the audit tool, for example, training or further guidance on the tool? Okay. On training, training is a very common and a very important part of a firm's system of quality control. And firms routinely consider training as a key focus with regards to their suite of remedial action in addressing a quality control criticism. However, the relevance and likely effectiveness of those training improvements to remediation process under photoblind depends on the particular circumstances. We take into account various considerations when evaluating training programs employed by firms as steps to attempt to remediate quality control criticisms. We look at content and delivery method. Do the content and delivery represent a meaningful change from those that were in place at the time of the audits with deficiencies? This is particularly important when we're dealing with repeat and persistent criticisms, when training was a key action that previously for some reason didn't work. And where a firm is offering up a training program, a similar training or another training program in the subsequent year where the criticism repeats, we take a very keen eye, a very critical eye whether that training is meaningfully different versus the training that previously did not work. And so in many cases, training in and of itself will not, in our view, remediate a repeat or persistent quality control criticism without other types of actions. Does the training specifically address the relevant QCC? The nature of the training method, is it in person, is it webcast, is it self-study, is it engagement team focused, or is it a general class setting for everybody at the firm? Depending on that could actually potentially improve the quality and the retention of the information and its application when teams go back out into the field executing the audit. The quality of the content, including whether the content included case studies and periodic testing during the session, and also considering the amount of time that's actually devoted to the training relevant to the quality control criticism. We look at the background and qualifications of the course instructors, the target audience, whether the training has been specifically tailored and provided to the appropriate levels of professionals who'd be expected to perform or review the relevant audit procedures. This kind of goes maybe considering your root cause assessment. If the root cause assessment was the engagement team, particularly perhaps the staff, didn't understand the particular standard, having a training that's targeting managers and partners might not make totally sense, and there's losing the opportunity of getting the staff involved with the training is one example out there. We're contemplating the scope of the training program, making sure it's getting to those individuals who need the training to improve the firm's ability to actually execute on that particular topic. The extent to which the training is mandatory and required participation, including processes for monitoring participation. How does the firm determine the target audience required to participate? How does the firm follow up with those who did not participate and advise those individuals of required participation alternatives? How does the firm consider compliance with training requirements in staffing decisions and performance management process? For us, training, it's hard for us to give it much weight unless it's mandatory. Or if it is voluntary, that we would expect there to be a very high percentage, to be quite frank, in the upper 90%, for us to give training a significant weight as a remedial action in and of itself. Also realizing live training, you might not be able to get everybody over there. What's the follow-up thing out there for the folks who weren't able to attend it? What makeup sessions, all that stuff. Telling us about how you covered down on the population that was not able to participate in a live training is important to us. Post-training steps and other considerations, the extent to which the firm tests retention of course materials and monitors execution of audit procedures based on those trainings. The day after training, how does the firm make sure that the staff actually got it and are able to apply the materials in the training? And we consider whether the training receives CP credit as well. A couple other things, maybe repackaging what I just spoke about, but when we look at training, a couple things the firms might want to think about. Does the target audience include all individuals who will perform and review the audit work? Did the firm follow up with those who did not participate in the live training? Does the evidence support the training scope and depth of which the training topics were addressed? This, we're talking about the training slides, speaker notes. Obviously, training slides might be here, but there's a lot of depth as far as what's actually being presented. Contemplating bringing and supplying us with speaker notes, which a lot of times go in a lot of depth. Any other handouts on case studies and all that is providing that information to us as well. Method and content, making sure it, in some cases, differs meaningfully from the firm's prior efforts. Is the training responsive to the scope of the QCC and tailored to the underlying deficiencies? If training is going to be an important aspect of it, it's contemplating the scope. Is it just targeting, and I'll use the example of testing estimates. Is it the testing estimates QCC might have certain underlying deficiencies on inventory reserves or revenue estimates. But keep in mind, it's a testing estimates QCC, so we do expect a broad action to deal with testing all significant accounting estimates. And making sure you contemplate that and addressing not just doing a training necessarily as an individual action, just addressing the revenue estimates or the inventory reserve, if that's the firm's only actions. It can be something that you might want to target as underlying deficiencies, as long as then the firm has other actions addressing the broader aspect of testing estimates as well. So contemplating that relative to the individual action, but then also your suite of action to capture the scope of the quality control criticism. Does the training include reinforcing content or steps such as exercises, case studies, or content how to use any relevant tools or templates? Post-training actions, does the training include post-course assessments? If so, are the exam questions designed to test more than a very basic level of knowledge? Is the training accompanied by post-training steps to monitor whether personnel are effectively implementing the intended actions? If the training is happening in February, and sometimes we run across this where the remediation period end is in a January or February time period, and firms are putting in a training in December or January, that's really more likely to affect the next audit cycle, which is 10, 12 months away, as the firm contemplated what they might do to refresh the participants' knowledge or a memory of the training that was taught back in the January, February timeframe. I think that's something important for firms to contemplate that might enhance the quality of their training activities. Is the training accompanied by other post-training steps to refresh their knowledge? Could be short videos, other communications that might go out to help reinforce what they learned in the training 7, 8, 9 months prior. Make sure we got, tight over here. But the next one is really trying to take an example QCC and kind of have you all understand kind of what we go through and what we think through that might help you all respond to a quality control criticism. And in this case, chose the example QCC is being engaged in quality review as the example. When developing remedial actions to respond to this type of criticism, it's important for firms to understand the scope of the criticism, the root causes of the criticism, and the underlying deficiencies, and whether the criticism is repeat or not. So those are 3 or 4 key questions before delving into developing a plan that a firm should think about and have that foundation for them then to move forward with developing a remediation plan. So the scope of the QCC. In this regards, the criticism relates to the failure to identify deficiencies in areas that the engagement quality reviewer were required to evaluate under AS 1220. AS 1220 describes various areas that engagement quality reviewers are required to evaluate, such as areas of significant risk, significant judgments related to identified misstatements, control deficiencies, and the determination, communication, and documentation of CAMs. Root causes of a quality control criticism, underlying deficiencies being another important aspect. The extent of the root cause analysis will vary based on the nature and complexity of the deficiency in the firm itself. For example, in some instances, the causal factors may be relatively apparent and therefore require less analysis than situations where the cause of the deficiency is much more complex and might require more significant effort. There may be multiple causal factors contributing to a deficiency. In many cases, it's not just one causal factor. Whether the QCC is repeat, if a quality control criticism is similar to a criticism that has been included in one or more of the firm's previous inspection reports, a strong remediation response will reflect meaningful consideration by the firm of why the problem persists despite the firm's previous efforts, and using that as a foundation for contemplating developing different types of actions at getting at the current quality control criticism. It's particularly important. Applying the guidance here, with regards to the QCC, this slide highlights example actions the firm may consider related to an EQR quality control criticism, looking at workload and expertise monitoring. Some firms have programs in place to monitor workloads in areas of expertise to ensure the partners are assigned as EQRs will have sufficient time, experience, and knowledge to complete the assigned EQR's role. Many audit firms consider seniority and reporting lines among other characteristics of engagement partners when assigning EQR reviewers will be able to competently and objectively evaluate and challenge engagement team judgments. Timely and increased involvement of EQR reviewers for key audit milestones. This is something we hear a lot about from many firms, looking at developing more clear audit milestones and trying to move work away from the crunch at the end of the year. So some firms are implementing milestones meant to promote the timeliness and quality of audit procedures, including the timely involvement of EQR reviewers. Some audit firms focus on increasing the EQR reviewers' involvement in the planning discussions and create frameworks to require audit documentation to be reviewed by the EQR reviewers more timely. So have them involved in each phase of the audit instead of going like, here, you got 2 days to get this through here and us to respond at all. Is pushing that work along with the audit into the earliest stages of the audit. Increased accountability. We've seen some firms have established programs to expand accountability for audit quality to the EQR reviewers, rewarding and penalizing reviewers depending on whether internal or external inspections found engagement deficiencies in the audit in which the EQR was responsible for reviewing those particular areas. So also see firms considering new and revised audit tools and guidance. Some audit firms have created or revised tools and clarified guidance for the EQR review to, for example, provide more detail on the EQR review requirements with the focus on the EQR reviewer obtaining a more detailed understanding of the conclusions reached at various phases of the audit. New and revised trainings that include content on how EQR reviewers can enhance the quality of the review of the required areas. A lot of times we'll find training just go through the paragraphs on 1220, which is just, these are the technical aspects of what they're supposed to look at, but don't necessarily go out and provide guidance to the EQR, how to do a better review with due professional care, what work papers to get into, and the depth of that review, the quality of that review. case studies or illustrative examples we also find could be very helpful over there. So it's just something to think about when developing an EQR training type program. And we expect, where you're dealing with repeat persistent, we expect the trainings to be meaningfully different than the EQR trainings that were previously in place that did not work. Taking a look at things to consider, helpful questions a firm might want to contemplate are the planned actions responsive to the quality control criticism and any identified root causes. Do the actions involve meaningful changes to the firm's quality control system related to performing EQR reviews? How are the actions designed to drive a more robust, as talked on the training side, to drive a more robust quality EQR review? Does the action go beyond merely instructing the EQR to review specific areas and address the quality? If the action involves a checklist, how has the firm reinforced effective use of the checklist? For example, does the checklist include guidance on how to execute each of the required steps? If the action involves training, does the training have meaningful content on how to apply it 1220? Again, I mentioned before, are there exercises and all that could help with regards to that? Other resources, we've created a remediation response template that many of you may have heard of and actually may have already used. We've been offering that up for the last year or so with firms, kind of on a beta test to see what they thought of this firm response template that we developed. We believe the template has been useful, and it's been useful for small and very large firms that have been using it. The purpose of the template is to provide firms with a standard format to describe how each action taken by the firm addresses the quality control criticism and meets each of the 5 criteria. We've embedded as much of the guidance into the response template so that going through this, it hopefully will help to drive a better quality response, that it'll prompt the firms to address each of the 5 criteria in their remediation submission, which we do find quite critical in drawing out a quality firm response. The response includes 2 parts. There's an Excel template for listing each action, mapping each action taken to the QCC and the firm identified root causes. And there's a Word template that's set up in tabular form where the firm can then address each of the listed actions by providing the detail on its design in a much more robust way. And again, this is a tool we've developed. If there's a desire to have a cover letter on that or an additional document for the firm to kind of more broadly articulate its response strategically, that's fine. It's a template that we've made available, and we encourage its use, but it's not required to be used. I just want to stress that. It is something we do think is helpful, but we don't require its use. We recently, with regards to the new inspection report transmittal letters, referencing to a variety, we reference to the new supplemental guidance, but we also reference to the response template. So if there's an interest in wanting that template up front, and this is communicated to with the issuance of the report, there's a name on that with regards to a remediation team member who's your point of contact. Please reach out to them, and we can facilitate providing you the template, which would be filled out with the actual respective firm's quality control criticisms as well. And again, foundationally, we encourage firms to engage with us as early as possible in a remediation period. Again, can't stress that enough. We are here to be available to act as providing some feedback on your responses as early as possible. I know I've said that multiple times, but that's critical, I think, into the quality of the firm's remediation efforts. So that's all I have. I guess there's another slide I go through, which is perhaps the most important part here, which is the code for today at this point, code number 4637. And I'll wait there, and I'll pass it on to Janet.
Thank you, Glenn, for that deep dive into your remediation process. And so now I just want to take you all through like a brief knowledge check. We're going to go through some polling questions on past topics we had last year on the forums, and actually a few weeks ago in Miami, one that got canceled due to the hurricane, so we had to hold that last week, or a couple of weeks ago in March. This will help us kind of get an idea of what areas may need more attention maybe if we have to develop spotlights, that sort of thing. Okay. Let's see if that's going to come up. Okay, so here's your first polling question. So how many approaches are there to substantially test accounting estimates? And I'll give you a minute to record your responses in Conferences.io. Looks like we're climbing a little bit. Okay, so the correct answer is 3. Good, everybody got that. So there are 3 approaches to testing estimates, and the auditors may use any of these 3 approaches, either individually or in combination. So those 3 approaches are to test the company's processes used to develop the accounting estimate, or the second would be where the auditor would develop an independent expectation for comparison to the company's estimates, or the third approach would be to evaluate audit evidence from events or transactions occurring after the measurement date related to the accounting estimate for comparison to the company's estimate. The auditor's decision about which approach he or she takes to an auditing estimate should be informed by the auditor's understanding of the process that the company used to develop the estimate, and if relevant controls are tested, the results of those controls. And what are some things auditors would think about when selecting a substantive testing approach or approaches when it comes to auditing accounting estimates? There's no one-size-fits-all approach. How you determine which approach or approaches is going to kind of be informed on a few things. So let me go through a few examples here for you. So number 1, testing the company's process may be appropriate if the auditor intends to rely on the controls over the process, or the company uses a complex proprietary model to develop an example. Another thing that might influence what approach you take is if the company's controls over an estimate are ineffective, then you would want to develop an independent expectation of the estimate and whether or not it was appropriate. And then another way to determine your approach would be if the estimate has multiple components or multiple significant assumptions, you might want to take different approaches for individual components or for individual significant assumptions. And then of course, there are relevant subsequent events or transactions that occur after the measurement date, so evaluating these events and transactions may be your best testing approach. So with that, we're going to move on to the next polling question. Okay, so in this one, the company reported an allowance for loan losses that included a qualitative reserve component that was based on basis points assigned to various qualitative factors. Which of the following statements is true? And I'll give you a few minutes to record your responses there. Was the auditor required to test the company's processes? B, the auditor was required to evaluate the reasonableness of all assumptions related to the various qualitative factors? Or C, the auditor was required to evaluate the appropriateness of the method used by the company to develop the qualitative component of the AOL? D, all of the above, or E, none of the above? Okay, let's see how you guys did on this one. So the correct response here is actually E, none of the above. Okay, so the reason behind that is with respect to A, there is no requirement to select this approach to test the company's process. Rather, the auditor should consider its understanding of the estimate in selecting that approach. With respect to B, the auditor must first identify those assumptions that are significant. You don't have to test all of them. You have to look at the significant assumptions that are most important to the recognition and measurement of that accounting estimate, and then that is what the auditor is required to evaluate the reasonableness of those significant assumptions. And it may not be all of the significant assumptions. It'll be those that deal with the accounting estimate based in the auditor's view. And then with respect to C, the auditor is required to evaluate the appropriateness of the method used by the company to develop its qualitative component of the AOL when testing the company's process, or if the auditor developed an independent expectation of the estimate using the company's method. So otherwise, as part of its risk assessment procedures is required under AS 2110, paragraph 28, the auditor should obtain an understanding of the company's information system, including the related business processes relevant to financial reporting and for accounts that involve estimates, the processes used to develop those accounting estimates, including models used, data and assumptions used, and the extent to which the company uses a third party. So we'll go on to our next polling question. Okay. These polling questions are going to be dealing with the use of other auditors. So on this one, which of the following is not a member of the engagement team? I'll give you a few minutes to record your response there. Okay, let's see how you guys did. So most of you responded to D, and that's correct. The answer is D. Specialists that are engaged by the auditor, also known as auditor engaged specialists. So the engagement team includes partners of and accountants and other professional staff employed or engaged by the lead auditor or other accounting firms who perform audit procedures on the audit or assist the engagement partner in fulfilling their planning or supervisory responsibilities. Other auditors are part of an engagement team. And under the new amendments, the lead auditor is responsible for the supervision of the engagement team, and it's critical that the engagement partner understand who is in and who is out of that definition. And there may be changes for audits where the other auditors are supervised by a lead auditor under AS 1201. And on that slide, we had some of the examples provided in the adopting release to illustrate the application to the team, of the term. So, for example, part of the engagement team would be your engagement partner, personnel of the engagement partner's firm who perform the audit procedures, personnel of accounting firms outside of the engagement partner's firm who perform audit procedures, and national office or centralized groups personnel who perform audit procedures. Those that are not part of the engagement team would be your auditor engaged specialist, engagement quality reviewer, Appendix K, or the filing reviewer, personnel of a referred to auditor, third-party service organization auditors, and individuals employed or engaged by the company being audited. So in the interest of time here, I think we're at our time for this session. So I'm not going to go through the rest of the polling questions that we have here. And let me make sure, well, let me go through, I think we had, I'll get you the CPE codes real quick. We'll kind of go through this. There's your first CPE code. It's code 509. Again, that's 509. Should be probably one other one in here. This one in advance. Okay, and there's your next code word, 440. And I think that's going to be it. So thanks for attending the session today. Most of what we've covered today in this session is, you can definitely find it in the various spotlight documents that are on our website, and we hope that you found this session useful. Also, as Erica noted, please make use of the small firm information that we've set up now on our website. I think it's very helpful. So with that, thanks for your time.